A Russian invasion of Ukraine is imminent, and you do not want to miss out on what impact it has on the markets. So stay tuned. Hello and welcome to the Pine Street Capital YouTube channel, where we talk all things trading and investing. My name is Ron and I'm the managing partner of Pine Street Capital. I've been trading for over 7 years, and today we are going over some market analysis. Now, this market analysis is brought to you by the World Series of Trading, the only place where you can make real money trading virtual funds. Now, if you'd like to join our trading competition with a total prize pool of over $200,000, join using the first link in the description. Without further ado, let's get into the market analysis. But first, I need to remind you that none of my videos constitute financial or investment advice of any kind, or any advice to take a position in any financial instrument. Let's get into it. Welcome to this market analysis for the 22nd of February 2022. Now, if you've been trading these markets, you will know that we've been trading literally headline to headline with the development of the Russia-Ukraine story. Now, a lot has happened over the past couple of days, in fact, over the past week, and we're going to cover all of that within this market analysis video. But just to give you a rundown of what's happened, say over the past 7 days, at the beginning of last week, we got reports that Russia could invade Ukraine any day from now, right? That was last week, Monday. And we spoke about that in last week's market analysis. And fortunately, that hasn't happened yet, right? However, over the past week, we started to get a lot of news from the White House, basically stating that Russia could potentially use the media to push a narrative that Ukraine did something which induced them to attack to justify their actions, right? And we started to get that yesterday, actually. So yes, over the weekend we started to get news of some ruffling of feathers within Ukraine. Apparently, Russia killed 5 people who apparently were trying to get out of Ukraine and through the Russian border, right? And Putin basically used this as one of those, these people came into our country, but we're not going to take action as a result of this. We'll assume these guys were just acting on their own accord and things like that, right? However, now I guess he's sort of got the media on his side, because he's created that narrative. That's of course assuming that it was sort of a planted story, which isn't a stretch of the imagination by any means, right? So after that, on Sunday, we then started to get news out of the White House that they were potentially going to have a summit with Russia to discuss a diplomatic solution to all of this, right? But then President Putin, within a few hours, responded and said there was no confirmation of such a meeting, which then started to show you the kind of tension that exists with this particular situation, right? So after that, President Putin then gave a speech last night and basically said that he would officially deploy peacemaking military into Ukraine, into the Donbas region, basically. So that's Donetsk and Luhansk. I hope I'm not butchering that. So that's what happened, and so that you have a visual representation of what that looks like, I'm going to share my screen and show you the charts. Okay, so this is what's going on with the Dow Jones Industrial Average. That's the 30 largest companies in the US, right? So the moment
this geopolitical tension started, we started to get another decline in the markets following January's decline. Okay, now we're sitting right about at the lows of January's decline, and this is a very strong level of support, right? And you can clearly tell that this market structure has changed. We are now in a clear downward trend, right? So we're at a strong level of support, and the real question right now is what are we going to get out of the news headlines with this Russia-Ukraine situation? And whatever happens is going to determine whether this market bounces off this level, or if we then go on to break this level and then create new lows. Okay, so Goldman Sachs actually came out with a report this I think it was yesterday, stating that if Russia does invade Ukraine, then we could get up to a 6%, about a 6% decline in equity markets from Friday's close. Now, if you were trading yesterday, then you'll remember that yesterday US markets were actually closed for President's Day, right? But despite the fact that the market was closed for President's Day, we actually got a 2% decline in the futures, which is a huge move on any day when the market is closed. But when the market's closed and futures are moving like that, then you know that the market's sort of jittery about something. Okay, so we'll just wait and see how this story develops. However, I think best course of action for me with regards to the Dow Jones Industrial Average is, although we are in a downward trend, this market is looking quite oversold and we're at a strong level of support. But there is huge geopolitical risk, so I definitely wouldn't be shorting the market at this level. If anything, I'd wait for some kind of bounce like that before further decline, assuming an invasion does happen, right? So that's I think a higher probability trade with a really good risk reward. However, should we not get an invasion of Ukraine, I think this also presents a very good risk reward ratio for those looking to get long. And you know, you could be targeting this level at first, but if we do come to a diplomatic situation, a diplomatic solution, then we could get the market rally further beyond this level of resistance right here and maybe go back to the all-time highs. Okay, so that's the Dow Jones Industrial Average, and as you know, when the US sneezes, the rest of the world catches a cold. So you can expect pretty much the same with the Nasdaq. However, with the Nasdaq, it's quite tech heavy, and tech is more volatile than the average stock in the S&P 500 or the Dow, right? So because of that, you've got a more exaggerated downward move following the increase in geopolitical tension over the past week. So with the Nasdaq, we've broken out of this range, and we've actually broken into new lows for 2022, right? But that does also come with opportunity, and I think the best play with the Nasdaq would be to wait for a bounce again, because the market does look quite oversold. And once it reaches this level of resistance, if you're playing for an increase in geopolitical tension or potentially a Russia invasion, then I would be looking for the market to get back up there before further declines, right? However, it does also present a high risk reward ratio. Should we crack above this level, get a pullback, I'd definitely be looking to trade that one. Okay, S&P 500, very similar story. We're at a level of support, and playbook is exactly the same as the Dow. Okay, moving on to the FTSE 100, which is held up quite well when you compare it to the rest of the indices. UK markets have held up quite well, and I think that is as a result of the strength in the dollar, right? Stronger dollar, weaker pound. And as you know, the correlation between the pound and the FTSE is inverse. So that's led to less declines in the FTSE 100. Okay. So now with the FTSE 100, this does look like a good one to take to the long side. However, if we get to a diplomatic solution, I'd be looking to get long around about this level, but I don't think there's a trade here. Moving on to the euro against the dollar, right? So along with all of this rhetoric, we also got the US threatening to impose sanctions on further sanctions on Russia by removing them from the SWIFT system, right? Now, removing Russia from the SWIFT system will essentially close it off from the rest of the world, and it would make payments between Russia and other countries almost impossible, right? However, Russia does have an out with another payment system, which was developed by the Chinese. So that's sort of their out. However, getting removed from the SWIFT system could have serious consequences for the Russian economy, right? And them being removed from the SWIFT system would be bad for the Russian ruble, obviously. So the trade in the currency markets right now, I think, would be to short emerging market currencies, because the Russian ruble, although the situation with this particular currency is independent. Emerging market currencies are usually traded as a basket, right? And when you also get this risk-off type sentiment, you get weakness within emerging market currencies. So you can definitely expect that if we get an increase in geopolitical tensions, we get a weaker rand, weaker Russian ruble, weaker Brazilian real, and so on, right? So that also does translate to strengthen the dollar, right? Because these currencies are traded in pairs. So another thing that's been overshadowed with this whole Russia-Ukraine situation is the fact that the Federal Reserve is likely to increase interest rates by 25 basis points in March, right? And that's the entire story that everyone's forgetting, and that makes the path of least resistance for the dollar to the upside. Now, stronger dollar, weaker euro. A good play over here would be to the short side based on fundamentals, but when you look at the technical picture, you're getting this sideways action within the dollar. However, I think we do have enough of a fundamental catalyst for this market to move lower and break this support level at 112.76. Okay. Story on the pound: we're not expecting the Bank of England to move in March. That market doesn't have that priced in. So you do have some capped upside on the pound, which is why we've got this very strong resistance level at 136.36. Okay. However, at 135.22, it does present a good opportunity to get long should we get over here. However, with a stronger dollar, due to this geopolitical tension, you could potentially get a good short trade at the current level right here. Okay, looking at the yen is definitely getting a safe haven bid at this point in time. As you can see, we've gone into a downward trend, and that started as we started to see more news flow out of this whole Russia-Ukraine situation. So you've gotten a steep decline in dollar yen, and that's people bidding the yen up, and that's obviously because the yen is, well, Japan is a deflationary economy, and with strong exports, therefore a safe haven. So you're starting to get a safe haven bid in the yen. Now, the yen story almost mirrors the gold story. Gold as well is a safe haven. So gold is seeing a safe haven bid at the moment. And we could potentially hit the $2,000 mark, which so many analysts have been writing about, basically since the beginning of the year, right? However, it doesn't present the best risk reward trade right now, given the fact that it's at its highs and this market is looking quite overbought. Okay, oil story, obviously highly dependent on what happens with the Russia-Ukraine situation. Now, with oil, you've gotten sort of a more sideways action over the past week. However, geopolitical tensions have risen, so you've gotten this bounce from $88 to about 95, and I think it's highly likely that we break this level, particularly if you get a Russian invasion. Okay, Bitcoin, at this moment in time, I'd look at Bitcoin as a risk asset, right? And risk assets, just like risk assets, basically move in tandem with the equity market. So if you get a decline in the equity markets, then you get a decline in other risk assets. And Bitcoin being as volatile as it is, you can expect some significant downside should we get a Russian invasion over the next couple of weeks. Ethereum, very correlated to Bitcoin, and same situation. Now, one currency pair we usually don't look at is the South African Rand, and this chart actually shows you the rising geopolitical tensions with the Russia-Ukraine story, right? Obviously, the South African Rand has absolutely nothing to do with what's going on in Russia. However, because of the fact that EM currencies are traded within a basket, you're starting to get weakness within the South African Rand. And I'm sure if geopolitical tensions continue to rise with the whole within Russia and Ukraine, then you're going to get even more weakness in the South African Rand. But those are our main markets. That's our analysis for the week. Trade safe, keep the risk managed, use stop losses, and I'll see you in the next one.